Despite all of this uncertainty, we're seeing firms like Marathon actually buying up Evergrande's debt. So what are the risks here?
Yeah, it's quite extraordinary to see interest from big US players like Marathon and elsewhere other US hedge funds kind of looking at Evergrande debt, essentially on a recovery bet that, ultimately the recovery will be higher than the kind of 20 cent to 25 cents on the dollar range that we're seeing the pricing of a lot of Evergrande notes at the moment. I think the risks are sort of twofold. Firstly, there is going to be some jostling between the onshore bondholders and the offshore bondholders, which is, as Marathon's CEO mentioned, and potentially a restructure could also play to their favour. Onshore bondholders, of course, have proximity to the situation, and that is a significant advantage in this case. I think the other sort of risk here, if for the debts that may not be widely known, Bloomberg reported about this $120 million bond that is said to be guaranteed by Evergrande and its unit. Now, the precise nature of the guarantees on that bond and the precise risks about cross defaults there were not widely known by the market. And of course, there is a potential for other deals of this sort that may not have been listed on the exchange, that may not be widely or publicly known, do pop out of the woodwork.
What is not even easily known is whether they have or have not missed coupon payments, right? We think they missed them yesterday, according to a couple of debt holders who I think told us late last night that they still hadn't received the interest payment. What does that potentially mean for the credit rating?
Yes, Fitch's credit rating yesterday kind of said it all, that there was likely a missed payment and they weren't able to confirm. I think that is the increasing assumption from many analysts, that we are seeing missed coupon payments. Of course, we don't have any clarity from that coupon that was due last week. And several bondholders again telling us they didn't receive payment for the $45 million coupon payment that was due yesterday. And so, and I think it's pretty likely that we start to see perhaps Moody's and also S&P also move to lower the credit rating. Fitch was the first actually to do that to its lowest rating possible.
Any signs of the authorities starting to move?
We have seen, overnight, so the PBOC again urging banks to maintain a healthy property market. And of course, we've seen these 9 straight days of injections of liquidity from the PBOC to kind of help ease things up. And although it's a smaller market, residential mortgage-backed securities issuance has also ticked up during the Evergrande kind of saga. And that will help again kind of buy some time for property firms and ease potential balance sheet worries in the short term. So we are seeing kind of the PBOC and authorities stepping in to make sure that things are kind of easy, particularly going into this long break that we're expecting.